Hello, good evening, ladies and gentlemen, traders and investors. Alex here from MarketWise Asia. Thank you for tuning in to this Facebook Live and also YouTube live stream as well. So if you can hear me loud and clear, please say a hi to me in the comments so I won't bite. I'm very friendly. So say a hi to me so that everything is good, everything is well. I know that, okay? Then just give me a like, share, and comments as well. Hello, Dave. Good to see you. All right. So, Catherine Chua, good to see you also. Thank you. Kim Ming. All right. So, today it is the 9th of September, okay, 2024. Okay, this is the first day after the school holiday. Okay, I bet most of the parents here, all the children are already back in school already, back to normal. All right, so Pei Wen, Amy, William, okay, thanks, San, okay, Gilbert, good to see every one of you here. Michael, okay, so let me share my screen right now. Hello, Christina, let me share my screen. Okay, so give me a like, share, and comments, huh? All right, the night is still young, okay. All right, so let me take a look at my screen. You guys can see my screen, right? So as usual, a disclaimer first, whatever I share, okay, today is just for education purpose, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. Huh? Okay, this is not financial advice. All right. So as usual, the social media channel, please subscribe to every single one of them if you have all of them. Okay. So let me just post it in the link in the chat box and also in the link over here. Okay. So let me take a look at how many people are actually watching on YouTube. Okay. So 42. Okay. So about 42 on YouTube, about 30 plus on Facebook. So total right now it is about 70 plus. So we are still happy more people streaming in right now. Okay, so as you can see over here for today's right, the live stream is proudly supported, okay, and sponsored by Philip CFD. So before I kickstart today's session, okay, just a very quick, okay, promo from Philip CFD where you can claim your CFD welcome gift. And today it is very apt because, okay, Palantir has been added to the S&P 500. So that's the reason why you need to, subscribe to our Telegram channel. And see over here the price mover, a lot of those interesting new breaking news I posted into the Telegram channel. So Palantir, Dell, and Erie rise. Actually, to be honest, I've never heard of this company Erie. Okay, until now. Okay, I know Palantir. Okay, like almost going to go into S&P, but Dell, of course, most of you should know. Like Erie, I don't think. I not as in no, I don't know it. Okay, rise on announcement to join the S&P in September rebalance. So right now, Palantir PLTR. Okay, so right now Palantir today have a gap up. So today is up about 11%, about 12%. So right now the price it is about $34. Previously it's about $30. So right now, Philip CFD has this promo, right? You just need to open a CFD account. No funding is needed. Just need to open a CFD account if you are totally new to Philip CFD. So if you do not have a Philip account, you can open a CFD account, trade CFD, and get up to US $400 worth of share CFD. But for the Palantir CFD, right, you just need to open a CFD account. No funding is needed, okay? And you get a share of Palantir CFD that is now worth about 34 US dollar. Okay, at the end of the promo period that it is in December, then everything is good. Then they will credit this Palantir CFD to your account. Okay, no funding is needed. Just need to open only. All right. And if you manage to trade 1.5 mil in CFD contract value, then okay, you get upgraded, you get offered this TSM CFD. So TSM, okay, it is right now, it is about 160 US dollar. Okay, and if you actually manage to trade a 4.5 million in CFD contract value, okay, you get upgraded to a tier 3 where you get a Microsoft CFD. So Microsoft is about $400 right now. MSFT about $400. Okay, yeah, about $400. All right, so all the details, everything, right, the terms and condition, right, pretty much simple. You can, just read it at the website. I'll just share the link in the chat. Now, this is only for the details. Okay, if you really want to open an account, okay, please head over to this Open Philip CFD account so that I know it comes from my side. Okay, all right, so this one, just head over to this link bit.ly/MWA/Philip CFD and you'll be brought to this page. Okay, and it is pre-selected for you already. So all you have to do is just to open an account. Okay, continue. But the key thing is this contract for different CFD must be checked by right. It should be checked. So no issue. And after that, just continue open the account. If you are residing in Singapore or SingPass, right, then it is very simple for you. About less than 10 minutes, okay, you can get the account already. Okay, all right. As I mentioned, for those who just joined, okay, you get to have this open account. If you are new to Philip CFD, you get this PLTR CFD when the end of the promo it is over. Okay, so again, no funding is needed. So once again, last one, I will just post this link in the comments over here. All right, so let's head over to the main thing right now. That is the economic data for this week. So for this week, the week of so-called second week, okay, the September 9 onwards. Okay, let me just post this link, okay, from Forex Factory. And this coming week, okay, it is the CPI and the PPI. So CPI, it is at 8:30 Wednesday and Thursday 8:30 p.m. Singapore. But I think, okay, right now, the inflation narrative, the inflation story and all this is not that important right now. So because we all know that inflation, it is coming down. You can see that CPI previously was 2.9. So right now it's about 2.6. So it is actually coming down. So forecast 2.6. It will be about there, either 2.6, 2.7 or 2.5. It shouldn't deviate too much from that. So CPI, as in the inflation, it is not the main news right now. So recently, okay, the main concern, the main narrative that is, shouting around the media, it is actually this unemployment claims and all this, and the recession. Okay, and if the unemployment rate is climbing higher, unemployment claim is getting higher and all this, okay, there's a potentially a good chance that the market could be heading into recession. So right now, okay, recession is the main narrative right now. It is no longer inflation. Okay, so all this number will cause a so-called big hoo-ha in the market. So if you understand what I'm trying to say, okay, recession is the new narrative. Okay, just type letter R in the comments. Okay, so there are a lot more people coming streaming in right now. Okay, as usual, if you're watching this on YouTube, please subscribe and also like our YouTube channel. It doesn't take a few more seconds to like. It's very fast. Okay, just like and subscribe. Okay, and if you are watching this on Facebook, okay, do also like and follow our on our Facebook page, and also give me a like, share, and comments if you could. Okay, it really help me to broadcast this out to a lot more people, and it also tell Facebook and YouTube that you want to see more of our content in the future. Okay, so just give me a like. It will just take about 2 seconds or even 1 second. Okay, I really appreciate that. Okay, so many people here only hardly type R. Okay, so if you understand about this recession narrative, just type R in the comments one more time. Okay, so I hope to see at least a few more R. So at least I know that everything is good. Okay, R, Yang, you're back from Philippines already, right? Kimmy, Mary, thank you so much. Okay, so hey, by the way, okay, later, right, Apple will gonna have an event, okay, coming out the iPhone 16. So in case you want to know what is the main deal, whether this will shift the market or not, I don't know. Okay, but later Apple will have the event, Apple event. Okay, so this is the link over here. Okay, I'll post the link in the comments. So you can see here the Apple event. It will be broadcasted to you at 1 a.m. Singapore time. Okay, this is the iPhone 16 launch. So whether you move the market, I don't know. Okay, But if you take a look at AAPL right now, Apple, okay, it is actually coming down now, okay, coming down for the past 1 week or so, okay, Apple, okay. And of course, just now I mentioned, right, the recession, okay, is the main narrative right now. So if you actually look into last week, why the market actually is coming down, that is what the media is trying to tell us, why the market actually fell last week, right? Because of the labor market weakening, all this recession fear. So if you take a look at the Forex Factory, if I go to last Friday, is actually September 5th there. So you can see that last week, okay, the Thursday, the non-farm employment changes, okay, all right, you can see that the forecast, no, sorry, it's not this, okay, also can, okay, but the Friday one, the non-farm employment change, okay, forecast 164K, but the actual job created, it is less than that, okay, so it's 142K. So that is what all know, people thinking the labor market is weakening and such, okay. So you can see over there, because of this narrative, last week, the S&P 500, this is the futures, okay, you can see that, right, has been coming down, or has been coming down last week, okay, especially on Friday, where the S&P was down about 1.7%, and the Nasdaq was down about, I cannot see, was down about 2.7%. Okay, so that's the reason why. And and in case you want to know, I think actually Mary from SBI was asked, okay, so what is the sectors that is so-called performing relatively well right now? Because okay, the market is coming down recently. In fact, it is the so-called the outperformance is led by the defensive sector. So it has been quite some time since I went into FinBiz. So you can head over to FinBiz, okay? All right, and I'll post the link in the comments over there. So for FinBiz, this is under the group, right? Under the group. So you can see here, okay, for the past 1 week performance, can you see over there? Consumer defensive, okay. It is positive, real estate also positive, okay, and utilities also positive, okay. Although it's negative, but it is outperforming the rest of the other sectors. It's like technology for the past 1 week was the worst. It was down about 6% or so. You can see that, market is starting to be like fearful. So money is moving into the defensive sector, okay. And of course, real estate, okay, because okay of the news that the Fed it is going to reduce the interest rate, okay, because the real estate, property risk, all these are very sensitive to the real estate, and because of the reducing in the Fed, okay, that caused the real estate sector to have at least a rally, okay, last week also, at least outperforming relatively strong. So if you take a look at XLRE, okay, this is was pretty well, okay, ever since that, the news is saying that the Fed is going to reduce the interest rate in September and such, okay, so it's performing really well, okay. And just to let you know, yeah, talking about the yield really, okay, so this is the yield. So the Treasury yields are moved lower because of the anticipation that September it is going to reduce the interest rate. Of course, the yield curve uninverted, okay. I think since last week the yield curve have already uninverted already. So again, you can head over to this stlouisfed.org, okay. It's uninverted. So previously, okay, it is inverted where the the longer term yield has a lower interest rate compared to the shorter term yield, shorter term treasury, okay, bonds and all this, okay. So this is until since 1980. So I think I repeated that many times already, but just a recap, okay. Inverted means price has reached back above zero, okay, reached back above zero. This is 10-year minus 2-year yield over there. So again, you can see over there, every time that the yield uninvert, okay, it tends to have a recession. The gray shaded area, it is the recession area over there. Okay, so uninvert have a recession. Okay, uninvert recession. So again, not to be too worried about the current inversion, the so-called the uninversion yet lah, okay, because it will take some time if really there is a recession when it is announced by the neighbor, or as I mentioned, I call it the NABE, okay, all right. So it will take some time. So the lag time could range from 6 months to 1 year plus or so. Okay, can see here from here, right? It is when the first the 10-year minus 2-year uninvert, right? It was in January 2006. Okay, January. If 1 year later, it'll be January 2007, right? But it is 2008. You see, so it takes about 2 years or so, then start to have a recession. So it is not immediately. So do not be so afraid. People talking about the uninversion, the recession is coming like like next month or so. Maybe not so soon now. Okay, that is my personal view. Okay, all right. Everything clear so far? If everything is clear, just type letter Y. So that is yes in the comments. So I think today, should be pretty fast. I think nothing much to talk about. Okay, it's almost the same thing again and again. Okay, but I will share with you my some trade ideas. I think which is pretty interesting. What could be moving in the next few weeks, next 1 week or the next few weeks or so. Okay, all right. So this is the Treasury yields and the yield curve. Okay, and okay, of course, talking about the rate cut. Okay, so there is a talk that the Fed will either reduce 25 basis point or 50 basis point. So let's head back to the probability chart right now. Okay, so nothing new also. In the next 9 days, it is on the 18th of September. Okay, so can see over there. So right now, we can see that it is overwhelming. It's about 71%. Okay, that the market is pricing in that the Fed will cut 25 basis point. Okay, 25 basis point, that is 0.25%. Okay, personally, okay, I think the Fed will not cut 50 basis point. That is 0.5%. Okay, I think it will cut 0.25. The reason is actually very simple. It's not rocket science. Okay, the reason why I think that, okay, it is because that the Fed doesn't want to alarm the market that, thinking that the market is really, really, really bad. Okay, that will really spook, okay, the trader, investor, and the market. Okay, so if they immediately cut into 0.5%, okay, it is like signaling to the market that, hey guys, the economy, I think I can foresee that it has the data coming in that it is getting really, really bad. Okay, I think we need to act fast. Okay, reduce the interest rate to 0.5% fast. Okay, instead of just 0.25, so that can kickstart the economy forward. Okay, get people to spend more, get people to get people to invest more, borrow more money, invest in all the capacity, capex and everything. Okay, hire more people to kickstart the economy engine again. So this is the reason why I think, okay, they don't want to 打草惊蛇啦. Okay, even though they may have the data to say that, hey, the economy is really, really bad. Okay, but I don't think they will just immediately cut 0.5%. Okay, they will cut just 25 basis points. So does this make sense to you or not? Okay, if you think that makes sense to you, okay, just type letter S, makes sense to you lah. Okay, all right. So I think just as per normal textbook, don't want to give people too much surprises. Okay, it's just a standard 0.25% cut. Okay, all right. So this is the of course last week, actually for the past 2 weeks or so, I said that the at the start, okay, second half of September, it is the where trouble usually start. Okay, of course, right now we are almost there. Okay, the mid of September already. So last week I shared about some of the charts over there, right? So this week, okay, another one from Ryan the Trick over there. So this is from his data. So okay, this is from Carson Research. Okay, so election years tend to peak around now. This is now. Okay, and bottom in late October. Okay, so you can see from here, okay, it is pretty flattish, okay, during election year. Okay, and then the mid of September is where price starting to come down also. Okay, all right, and then yeah, so maybe before the start of the US election. Typically in November, price tends to pick up again. Okay, does Fed really care about? Of course, they need to care about the market. So the number one job, okay, of Fed is to maintain the stability of the market and the economy as well. That is their main role. Okay, I think that is the main role. The exact word I forgot already. Okay, the main task. Okay, you can just Google main role of Federal Reserve. Okay. Okay, maintain a stable and safe financial system. Okay, if there's a recession, and all this, okay, and suddenly there's a very bad of whatever thing, black swan event or whatever thing, that cause a very sharp, economy recession, and also sudden crash. Their role is to really to maintain the stable and safe financial system, and of course the stock market as well. Okay, to conduct monetary policy to promote stable prices, maximum employment, and moderate interest rate. Okay, they really need to care about the market. Okay, how effective it is, okay, we don't know whether it's as in they need to do that, but whether it's too late or too early, this is for us to judge. But their role objectively is to maintain a stable and safe financial system. All right, so this is what I've done. Okay, so let me go right now to the chart right now. So how is the market doing now? So the market actually pulled back a little bit. So when the market just now opened at the start at 9:30 p.m., it was pretty bullish. I think the Nasdaq was up about 1.2% that time. So right now it's only up about 0.5%. Okay, so okay, this is based on the naked chart here. Okay, I want to remove height or drawings. Okay, so this is the naked chart. Okay, so you can see over there. Okay, this is the S&P 500 overall. Okay, even with just a naked chart, you can see that it is overall still in an uptrend now. Okay, but it does tells me that the market it is actually weakening. Of course, the number one visual way, if you don't have the indicator like CPR, it is like forming a lower high. Okay, but usually I will have my indicator to help me. Okay, so you can see from here, okay, previously it was pretty stable, a price above the CPR, then after that it dropped, right? Of course, the sudden sell-off in early October, then that price go above again. And right now you can see that, right now we are below the pivot point, So the pivot point from the S&P futures is about 5480, which I told my SVI members as well. Okay, nothing new. Okay, for the public it's the same. Right now it is supported at the lower range of the CPR right now, which is at about 5,004 thereabout. So as I mentioned, okay, to them, also to you, okay, the pivot will be acting as a resistance area. So because price, typically when the market it is really strong, you can see that it will just get supported at the CPR. It gets supported at the CPR. Sometimes did not even touch the pivot point. You can see over there, get supported by the CPR. Okay, at the top. Okay, or just here, okay, you can see over there. Okay, so right now it is below the pivot point and it is acting as a resistance, the pivot point area. Okay, and for the Nasdaq, you can see that price it is below the CPR. This is the CPR below the central pivot range already. So as I mentioned, okay, the lower range of the CPR will be acting as a resistance area, which is now it is like acting like that. Okay, you can see that there's right now at this point in time there is some upper shadow lah. Okay, so it's acting as resistance area, and the Russell 2000, okay, was also weaker. Okay, you can see that previously it was up, then down, up again, and down again. So once again, it's pretty volatile, and right now price it is also below the central pivot range over there. So all in all, it is telling me that the market, okay, long term still uptrend, but short term within the next 1 month that kind, or 2 months that kind, okay, or the next 1 or 2 weeks, shorter term price action it is actually not that bullish. I can see that, you know, the number one thing that tell me that when a price has to turn from, you know, uptrend to a downtrend, it is most of the time, okay, it is not like, you know, immediate go up now. So, you know, it has to, you know, go below the CPR first. So when price is below the CPR, that is the number one thing that tells me that price, it is not that bullish anymore. Of understand what I'm trying to say? And the Dow, Dow is the stronger one. So right now we can see that it is get supported by the pivot point over there. Okay, but again, I also, even though the price action right now it is bearish, right? But one thing I'm also a little bit concerned is that a lot of people are talking about the seasonal. I go to X, Twitter, social media, Facebook, and some Telegram group. People are always talking about in this recent 1 or 2 years lah. Okay. People are always talking about, oh, September it is the weaker seasonality. Okay, I don't know whether it is me or what. I don't know. I remember that it just like somehow like recently, like a lot of people are talking about seasonality because if I'm not mistaken, I think I'm the one that keep talking about seasonal things. At least in Singapore. Okay, all right. But can see that it's always mentioning, okay, about this seasonality. So it makes me also a little bit about frightened okay? Because if too many people are looking on this, then a lot of times the market will prove the majority wrong. You get what I'm trying to say? Because, you know, everybody's looking at the same thing, everybody is checking out the same thing, then, you know, very unlikely that the market will do exactly what the crowd said. But again, okay, that is just one hypothesis. I mean that, you know, a lot of times it does that, but, you know, we still follow the price action, okay? So right now, even though my bias, it is more towards the downside, okay? All right. But I told my SBI also members that I am flexible. I'm ready to switch camp anytime. Okay, if price action, you know, start to go higher and such. Okay, again, I think right now we have about 1 week of time because anything can happen. Anything can happen. So of course, you know, within the next 1 week or so, 18th September. Okay, there is 1 week later. That is where the Fed will have a meeting. Okay, let's see whether price will actually you know, go higher and such lah. So okay, do you think everyone is so bearish the opposite will occur? Possible. So that's what I'm afraid of. When everybody is so bearish, the opposite might like, yeah, the opposite might come out lah. So yeah, so that is, yeah, I'm potentially that could happen. So I preparing myself, and okay, the key is anticipate that this could happen. So okay, don't to be so bearish, okay. Even though I'm gravitating more towards the bearish side, but you know, don't to be very bearish, okay. Be flexible, okay, to change your view anytime, okay. They will say market wants to fall because of the inversion reversal. This seasonality could just be the excuse to start the drop. The inversion, as I mentioned, right, Darius, okay, it is just inverted only, okay. You have to wait for the recession to really announce, then, you know, maybe the market will go down some more. It's just the start. Like, it's just like the market trying to scare the people, the media, okay, oh, recession, and such. But again, it is not surprising. Like, actually, it is not surprising that the market wanted to drop at any time also lah, because, you know, market has been climbing since the start of the year, okay. I mean that, you know, up, down, up, down, up again. So not surprisingly, if the market want to have another pullback, okay, and that would set up for a good you know, end of the year rally, okay. Imagine if the market, you know, right now continue to rally up like all the way up with no pullback, then until November the Santa Claus rally, then continue to rally higher again. You know, that is like pushing the market a little bit too far. Like, at least right now, okay, if you know there's a pullback, okay, even if the market might not drop, okay, you know, just can grind, okay, at least until November, okay, then go higher. At least that is a very decent pullback. Again, okay, the market S&P, okay, even though they anticipate that the market might not fall, it doesn't mean that the market will like do a V-shaped recovery it can do a V-shaped recovery. But what if the market don't do that? What if the market just chop around in in October until November? It can do that. Of course, not so sui like that lah. Okay, like in a very tight range, it can do like that. Okay, so within until here, this is the high. Okay, and this is the low over there. So the market, maybe can just chop around here. Okay, so it doesn't want to go down like what a lot of people expected. So it will frustrate a lot of traders waiting for the market to go down, but it doesn't go down. Okay, it can just chop like that, go up, chop like that. Okay, go up, chop like that. This is a possibility, right? Just chop like that for a while until November, then price go up again. So this is a real possibility. It's going to frustrate a lot of people, especially those trading the indexes. Okay, all right. Then of course, then your individual stock selection will be very crucial. Okay, the index might not move that much, but there will be other stock that is moving. Okay, do you agree with me? All right, if you agree with me, just type A in the comments. Okay, so even though the market might be just ranging, doesn't move, this is like correction, okay, through time. This is a correction through time. Okay, the one that we are waiting for is actually correction through price, where you expect price to go down. This is correction through price. Okay, so the market can correct through price or correct through time. Okay, so either way, all right. So this is the two ways the market can do. Okay, and for the zero gamma level, so you can actually go to the spot gamma, this SPX gamma exposure over there. So previously I mentioned that when price is below the zero gamma level, expect volatility. So right now, as of now, okay, it is about 5,500 or 5,560 there about. Okay, so you can see that this is based on a cash index. So SPX cash index, okay, 5,560. Oops. How come it is? Okay, it is because of the drawing. Oops, a lot of lines really. Okay, so just remove this. 5,560, I think. Yeah, about there. Okay, can you see that, previously last week, last week I said that, if price really break below 5,560, then expect more volatility. So this is what actually happened, right? You can see that the S&P on Friday had a huge, more, not say huge sell-off, but more volatile. There's a bigger price action and price just go down like this. Okay, so again, if you really want price to be more stable, okay, I don't know what's the exact zero gamma right now. It could change by tonight or so, but at least somewhere around here. I think it should be somewhere around here. I don't know what's the range. 5,560 or 5,540, that kind. So when price is above that, okay, then market could be a little bit more stable, then uptrend will just continue. But as of now, I am more gravitating towards the bearish side, but flexible. So as of now, I just want to do a very quick poll over there. Okay, are you guys within the next 1 month or so, 1 month now, so 4 weeks, are you guys bullish or bearish? If you are bullish, just type bull in the comments. If you are bearish, just type bear in the comments, so that at least have a sensing. Okay, don't be influenced by me now. Okay, you can have your own views. Nobody is right, nobody is wrong. Okay, I could be wrong as well. Okay, wow, so many bear. Oh, so many bear means so many bears means okay, the market is going to go up. Yeah. This is bad news. This is bad news. Okay, when everybody is bearish, means I'm most likely wrong also. Anyway, we shall see lah. We shall see. Okay. Anyway, so last week, okay, last week. So anyway, I'm more really all bear leh. Hey, no single bull, man. No single bull. Any bull or not want to 挺身而出 and tell me that you are a bull? Anyway, so this is my personal view lah. Okay, we shall see. So be flexible, get ready to change. But last week I talked about, I think not last week, for the past like 1 or 2 weeks, I talked about gold and such. Right, I can see that gold. I told you previously. Okay, my style of, like, for example, trading a commodities, I tend to like to sell futures options. So it was about there. I sell about pretty high up vertical put, a vertical call option. So we can say that, you know, as long as price doesn't move, okay, I am okay. I'm making profits over there. Okay, all right. That's right, Paywen. I should do a poll at the beginning. My fault. My fault. Yeah, indeed, you are right. I should do a poll now. Maybe you guys are not influenced by me. Okay. Anyway, yeah, like so GDX. Okay, previously I mentioned to my insiders as well. Okay, yeah, it it went down quite a bit lah. Okay, so if they really trade the GDX, okay, there are a few who traded, so a good profit. Okay, so once again, gold, I am actually not so bullish. Okay, I'm not sure whether about you. Okay, previously I think when gold, did I mention that? I forgot already. When like gold, or when gold it is somewhere around here, okay, or somewhere around here, I see that there are some educators or some trainers publishing on Facebook and saying, hey, that maybe there could be another leg up. Okay, they are super bullish lah. Okay, so again, you know, sometimes, you know, if you are really new to the market, right? Okay, and you are so-called waiting to get direction from some of these gurus, right? Okay, then if some of these gurus say that, wow, waiting for another leg up, you know, means that there could be another potential chance that I could make more money from gold. Or I think maybe you buy here, then waiting for price to go up. Or it did not, then come down, then maybe hit your stop loss if your stop is really tight, that kind of thing. So you tends to get influenced. So again, don't get influenced by any of these so-called educated trainers, including myself lah. Okay, even though I don't consider myself guru, I'm just a standard usual guy who is trading the market. Okay, again, because I'm a bit biased lah, I like to use seasonal because I have a seasonality, you know, data provider. I'm provider, so you know, seasonality, it tells me that, you know, market gold may not be that strong. It might not go down, but seasonal is weak. Okay, it might not crash, but at least, you know, that there might be limited upside lah. So it comes, hey, you know, maybe I shouldn't get so bullish about the market and such lah. So, you know, kept me in check. Okay, so this guru can say that the gold is going to go higher. You know, that guru can say that gold have another leg up, but I stick to my own trading plan. I know what I'm doing. Of course, that's because I am also more experienced. I have my own views lah, so I can do that. But I'm speaking from a beginner newbie point of view, because I was also once a newbie before. Okay, I know how influential educator trainer can affect your psychology. Okay, I was that 10 years ago. I also listened to some of these traders educator when they say that, wow, the market is going to crash big time. Oh, I become very scared about it. But the market never crash and then go higher, the kind of thing. Then how? So, you know, try to have your own views. Of course, this will take some years of experience to have your own kind of views. Okay, all right. This is just one thing. Okay, so gold is performing pretty well. Okay, like for example, okay, like last week I did mention a few stocks. Okay, just want to, I know Koi is here lah. I saw your comments just now, Koi. So like, for example, this is from yeah, this is from member success. So last week I actually mentioned a few stocks. Okay, IQV is doing pretty well. Okay, so I did mention a few of the sell short. Okay, some shorts idea. Okay, for shorting bearish ideas. So congrats, Koi, because I know that you are pretty new to SVI as well. Okay, so but your TP is pretty tight. So fast TP already. Okay, but anyway, congrats to you. Okay, Koi. Okay. Many guru bearish also. So that's the reason why I'm a little bit scared. I'm a little bit scared because a lot of people have the same views. So I am a bit, you know, prepared, anticipating that ready to run. Okay, in case I'm wrong. All right. So yes, so this is that. Okay. So how's the market right now? Actually not very strong as well. Okay, let me take a look at the BTC, also not that strong. So that could be some clue also. Okay, BTC, because typically when the market is risk on, okay, BTC will also go higher. I'm not sure whether you observe that. But again, this is not always that. There are sometimes the correlation will be broken. But recently I find that, when the market tends to go higher, the crypto will risk on and go higher. So, but right now, when the crypto is weak, it tends to signal that the equities market might not be that strong as well. Okay, but again, I need to repeat, it is not always like this correlationship. It can be broken. The market is not static. Correlationship can be broken. Okay, this is the crypto. And let me take a look at the okay, VIX just now was dropping 10%, but right now it's going a little bit higher. So yeah, so nothing much can deduce from that, but okay, but nevertheless, but again, for the SDI, okay, I do mention that another breadth indicator that I mentioned to you, right? Okay, to mention here, okay, yeah, it is starting to come down, stopping down, right? So that might be another clue. So all in all, there are a few factors that lead me to think that the market can be coming down. So I just stick to what I see, from some of these data and such. But okay, yeah, but yeah, get ready. Okay, then we go long then, but not yet lah. I'm still positioned in some shorts lah. Okay, wait till the market come down a little bit more, then go long now. That's the best lah. Okay. Anyway, so I want to I sort of finished the data that the things that I'm going to share with you, but I'm going to go share with you some trade ideas. Okay, some trade ideas for this coming week or next week or so lah. Okay, I want you guys to actually look into US dollar. US dollar. Okay, DXY. Okay, the dollar index. Okay, so this is more of a bullish trade idea, seasonals. Okay, so from the 19th of September, okay, to the 4th of October, okay, for the past 10 years, okay, 100% of the time, dollar index goes higher. Okay, so if you take a look at the dollar index, okay, it is actually DXY lah, DXY. Okay, DXY over there. Right, you can, oops, DXY, this is, yeah. So DXY, you can see from here it is, going down, okay, and get resisted by the CPR over there, come back down. Okay, it did not go below the low of this. Okay, forming a higher low already. So this was the low. Now it is forming a higher low. Okay, but the one thing that I don't like, it is actually this kind of looking pin bar. Okay, but nevertheless, you can keep a lookout on the dollar index as well. Okay, so today is actually pretty bullish. Okay, so there are, so as I mentioned from this data, right? Okay, this is the 19, it is almost there. Okay, you can take a look plus minus before that and see whether it can go higher and such. Okay, again, this is not telling you that it is going to be 100%, it is going to be like that. Okay, seasonal data can fail. It doesn't mean that 100% for the past 10 years, the 11 year is going to be 100%. It can still fail. So, but at least we have some data, okay, for us to base. Okay, so based on historical data, it is like that. Okay, so do you want to go against the trend? Maybe you can observe that and see whether price can go higher. So there are a few ways to do this. Okay, all right. So for me, like for example, I would do, okay, is to like maybe is to, I haven't had a position yet. Okay, so it is actually to trade the Euro USD. Euro USD is actually this one. So it is the inverse of the dollar index. So the dollar index, okay, it is holding about 60% or 60 or 70% euro, the basket of the dollar index. So which means that it is very approximately, okay, like the Euro USD. So if this is Euro USD, correct or not? So if the USD it is going higher, means that the Euro it is coming down. Can understand, right? Can do that, right? So okay, so this is the Euro USD. Another way you can do as a proxy, okay, is to trade the Euro USD. That is like, you know, anticipating that price can come down. Okay, this is another way. Another way that most likely for me is to trade the Euro futures, which is 6E in the futures asset class 6E. All right, so 6E is the Euro futures. So, you know, for me, most likely, you know, I would do is you know, sell a vertical call options. Okay, so to collect the premium. So again, what's the reason why I do like selling premium or I sell futures options, right? It is because futures options I can sell pretty far out of the money, I still can get decent premium. So there are a few ways that I can make money from this. Okay, so which means if I sell a vertical call options, so you know, Euro go down, I make money. Euro range, I also make money. Euro go up a little bit higher, okay, I still can make money as long as don't go up very fast up like that. Okay, if go up very fast like that, okay, then I will lose money. So there are like, you know, so basically there are three ways lah. Okay, go down, I make money. Don't move a lot, I also make money. Go up a little bit higher, I also can make money as long as, you know, it expire way below my strike price. Okay, when it expire. Of course, okay, there are risks lah. The risk is that, you know, if you don't manage the risk properly, okay, you can incur a huge loss, and of course, you know, the profit, it is capped at the premium that you are getting. Understand so far? Okay, if understand, okay, just type letter U, understand. Okay, so that I know. So there are a few ways to do about that lah. Okay, so depends on your preference. Okay, you want to, you know, long the euro, short the euro or long the DXY. There are certain safety provider, they do have the dollar. So of course you can use Philip CFD, okay, to actually short the forex as well, forex pairs. So for those who just came in, okay, right now the Philip CFD, they do have a promo, okay. I just do a very quick one. So all you have to do is just to open a CFD account. Open a CFD account, you can trade multiple asset classes, can be trading stocks, ETF, forex CFD as well. So, and you do not have to fund the account. And if, once you open an account, okay, you can get a PLTR CFD. And as mentioned, PLTR today was included into the into the S&P 500. Okay, yeah, PLTR CFD. So you can see that PLTR CFD. You can see that PLTR. Okay, it is up about $34. So you can get a $34 worth of CFD share over here. So this is a PLTR. So if you manage to trade 1.5 million in CFD contract, you get a TSMC, a TSM CFD. If you manage to trade a value in 4.5 million, you get a Microsoft CFD. So all the details are over here or over the side here. I'll just post the link in the comments. And if you open an account, right, please head over to this link here. By default, everything is already checked for you already, just to make sure that the CFD is checked. If you're residing in Singapore or Singapore citizen, then you can open an account using the SingPass. Then within 10 minutes, the account is open already. So once again, I'll post the link over here in the comments. Okay, so no funding is needed. Just try out. You can also trade the Forex pairs as well. Okay, I'll post the link in the comments. Okay, so this is for the dollar index. All right, so for the dollars, another one that I want to share with you, it is this corn jargon. Okay, jargon. Okay, corn. So for the futures, it's actually called ZC lah. Okay, so anyways, this is for corn. Okay, it's 17th of September to 8th of October. For the past 10 years, 100% of the time, okay, it went up during this period. Okay, this period over there. So for corn, you can see this is the corn futures that I'm looking at. For corn, it is ZC. ZC over there. So once again, corn, okay, well, previously, okay, during the 2022 when there was an inflation crisis, okay, everybody is very afraid of inflation, okay, after that go higher. But after that, when inflation peaked, okay, the soft commodities, the grains actually, just fell all the way down, okay. All right, and then you can see, it tries to go a bit higher in this year, but continue to go down lower. So right now we are also entering into a favorable phase, but again, the price action must come first. So, okay, so previously you can see that price resisted by the CPR. Oops. Price resisted by the CPR. Okay, come down. Okay, and then right now price go higher up. And right now we are above the CPR. Okay, even though right now overall is still in a downtrend, but before stock, ETF, asset classes can go into uptrend, price must go above the CPR first. Okay, the good thing, price run is above the CPR. So right now this CPR will be acting as a support level, and there is a pin bar also. Okay, so like maybe trapping some of these traders who wanted to go short, but price cannot go higher. Okay, all right. So let's see whether in the coming weeks or so the coins can go higher. Of course, there are also a few ways that you can tackle this trade. One is to trade the futures CFD. Once again, okay, you can go to Philips CFD, open an account and trade. Okay, it's the CFD. Okay, or you can trade the ETF. For the corn ETF is actually very simple. It is just corn, really corn ETF. Okay, these are Fulcrum Corn Fund ETV. It's just the ETF. You can see it's a proxy. Price also above the CPR right now. Okay, another way where you can do is also to trade the futures options. Okay, for me personally, if I really want to trade, okay, you'll be trading the ZC, where I will sell a put vertical options on the corn futures. So these are the one. So again, I always mention, okay, seasonality, it is not 包价, not 100%, but it is the closest thing to a crystal ball already. That's the closest thing to a crystal ball. Okay, at least it tells me to zoom in where I want to look at. Okay, I know where I should be focusing on. Okay, so this is for corn and dollar. And for those for the SVI, okay, in fact your ETF data have this dollar index. Okay, you go look through your September bullish ETF. Okay, it is under UUP. UUP is actually the dollar index ETF. UUP, okay, dollar index ETF. Okay, UUP. I actually mentioned before last time, okay, but I think most people forget, okay, or some of you, this is the first time you know that there's actually a dollar ETF. Okay, it's type, if you notice the first time you know that, just type UUP in the comments. You learn something new, UUP. But I don't recommend that you trade UUP because it can be very gappy. If you want, just trade the Forex CFD, or trade the just trade the dollar index directly, or the Forex CFD okay. Okay, UP, I don't recommend that you trade, but at least, okay, like for the SVI, you see that the dollar index is bullish. You should take a look. So you can infer from the data, ETF data, that okay, the dollar index is going higher, which means that the euro dollar is coming down, that kind of thing. You can infer from that. Okay, you can infer from that. All right, so and of course, I think Melvin, okay, last week I also talked about the so fast. Okay, okay, another profitable trade, okay, from Wylam. Thank you very much for the HCA call, profited within 2 hours. Hey, so fast. Okay, all right, I haven't entered, okay, anyway, yeah. Where is it? Yeah, so this is UUP. What should I forget my train of thoughts? What do I want to say? Crude oil. Last week I mentioned, right? Crude oil, we are somewhere around there. Okay, the seasonal. Okay, but since last week, price continue to go lower. Okay, so for seasonal data, okay, if you know exactly what you are looking for, okay, then you can actually go to this equity clock. No secrets, okay, you can get the seasonal data pretty simple and easily. But instead, provided you know what you want to look for. But if you're looking for trade ideas, right, then my data will be very useful, because you don't know what you don't know, so my data will tell you what you don't know. Okay, you understand what I'm trying to say? Right, so this is the crude oil. So you can see from crude oil, typically, okay, price tends to go down until somewhere around early September. So we are somewhere around that. This is for the past 20 years. But again, as I mentioned, seasonal it's not a 报价. Okay, it's not 100% sure win, but it is the closest thing to a crystal ball. Okay, but at least it tells that maybe you want to take a look at the crude oil right now. You know, it can be choppy. You can see up, down, up, temperature, but generally it is going higher during this period. Again, we must wait for the price action to confirm. So right now, you know, price just continue to go lower lah. So no action taken lah. So maybe okay, you want to wait for some trigger, wash and rinse trigger and start to go higher. Okay, then you maybe can try some long, but it is still a bit risky because it is a very strong impulse move down. So there are a few ways you can tackle this trade. Okay, once again, for me, I will prefer to actually sell a crude oil futures options on the on crude oil lah. So that would create that's my preferred method. Price go up, I make money. Price ranging, I still can make money. Price go down a little bit, I still can make money. As long as price don't sharply go down lower. That's the way that's the reason why I like some of the commodities I like to do futures options lah. Of course, you can trade oil futures directly, or oil CFD and such, or oil ETF, USO and such. Okay. All right. So these are the few things that you want to take a look at. Right. Just monitor them. Okay. Any questions so far? Any questions so far? I can answer a few questions. Also about 1 hour. Yeah. Every time I talk, I thought I can finish in half an hour. Also need about 1 hour. Okay. Any questions so far? Any questions so far? Can answer a few questions. Right. If you find value in today's session, you like what I share, you learn new things, you like the trade ideas and such, right? Type value in the comments. I really appreciate it. Or you can just simply give me a like, okay, in the YouTube or in the Facebook. Just give me a like. Liking is free, okay? But you help me, okay? And also subscribe to our YouTube channel and also follow and like our Facebook page as well. Okay, give me a like, share, and comment. Any other question? Any other question? So the market, it is okay today lah, but I'm still more gravitating more towards the downside. Okay. Forex, which broker is the cheapest? Forex, actually, there's no commission. Okay, so any decent MAS regulated broker will do. Okay, yeah, most of this broker Forex, they are very tight spread one. So it's very competitive. So, just, of course, today is probably supported by Philip. You can just try out the Philip CFD as well. Forex, there's no commission. Spread is very tight. Typically for Euro EFD is 0.5 to 1 pip only. Okay, of course, okay, if you don't like Philip CFD, doesn't matter. You can go to other regulated CFD provider as well. Okay. Of course, if you don't have a Philip CFD, then I encourage you to do that, because right now you get the free PLTR share as well. Okay. So with that, I think thank you so much. Okay. Once again, if you enjoy my sharing, okay, just like and share, and also type a value in the comments before I go. So I really appreciate that. So with that, thank you so much for your time today. So it is 11:30 p.m. So we shall monitor how the market will go later tonight. And I wish you a good evening. Have a good night, and bye-bye.